Welcome to the Four Wise Monkeys, the best shares and investment advice on the web. Our four monkeys providing the wisdom this week are none other than David Stevenson from the Financial Times, Stephen Barber from Self-Trade, pro-share investor Paul Dolman-Darrell, and the naked trader Robbie Burns. And your host today is Ryan Dean. When times are bad, do you run and hide like some scared little baby clutching your money and valuables to your chest? No, you go out there and make some big plays, big investments, and get some big returns. Or at least that's what our monkeys are going to advise that you do today. First up, Robbie Burns.
A lot of engineering companies have been really trashed in the current sort of down market at the moment. They're doing really badly. But I think it might be worth picking up one or two at very low prices. And one of the best engineering companies on the market is called Charter. Come down a lot, come down 200 or 300 pence. But its last statement said its full year profits are going to be much better than expected. And I don't think its markets have been hit as badly as one might think. And around the current bottom price, could be a nice one to pick up for the long term. Yep, construction companies obviously doing very badly at the moment. People who supply construction companies obviously doing badly too. One of the main ones is Speedy Hire. They hire tools to building construction companies. That sector is doing very badly. Speedy Hire has also said that it's being affected by the consumer downturn. I've already made quite a lot of money shorting on it, but I've shorted it again. And it's also got very big debt, so I can't see much upside to Speedy Hire for quite a while.
Now it's time to find out what's getting the monkeys in the studio excited. Right, first of all, Stephen's returned from his holiday, so welcome back, Stephen. And you played a bit of musical chairs here, so thanks for that. It's a bit annoying. David, you're up first this week. What have you got for us?
I'm going completely mad this week. I'm actually recommending a company that is absolutely involved with the house building sector. It's a company called Inland, and it is INL on AIM, I think. And it is, in fact, a land banker. And so what it does is it buys in land for redevelopment and sells on to house builders. So clearly the sector to be in at the moment. Not. But they've got lots and lots of cash. And crucially, they've got a really strong position in the southeast, so that when the housing market does pick up, and it won't pick up for a year or two, so it's a long-term value play, they're in the sweet spot because they can come along to builders and they can go, you want to get rid of that land? We'll buy that land off you at a big discount, and we can then slowly build up a portfolio. So
surely, David, this is absolutely mad. I mean, every single newspaper has been reporting stories of problems in this area. Stephen, what are your thoughts on this?
David's right. This is really a contrarian pick, and I just wonder how cheap they're buying this land and how long they can afford to hold on to it if we have a prolonged downturn.
Now, Paul, have you gone completely mad as well? I mean, what do you think of David's suggestion?
I kind of think it's actually quite a good buy. The only thing I'd be concerned about is that most of us generally have quite big investments in property, and as a result, I wouldn't maybe pick it for that reason.
So, obviously, the full moon is out, guys, and you've all gone a bit barking mad. Paul, what's your choice this week?
The company I'm interested in this week is a company called Education Development International. They're an exam board. You would have heard about exam boards this week with the SATs exams going wrong. This company specialises in something called vocational qualifications. What I really like about them is they've got customers who pay them in advance. They're growing 15% sort of market growth in that sort of area. This makes them a great investment. PE of 8.
Education's surely got to be a safe bet. David, where do you stand here?
I suppose there's also the question mark, which is, is it acquisition hungry?
Yeah, one of the things I mentioned is this company owns an ISP, which is slightly worrying.
ISP?
Yeah, internet service provider. It's slightly worrying because I kind of like companies of this size to be quite focused. The fact it owns an ISP doesn't sound that focused to me. But the thing is, I still see good market potential, and I think this company is going to benefit from that.
Okay, Stephen, so what's your big story for the last week?
Well, I've been looking at a really interesting geographical sector, which is North Africa and the Middle East. And what's telling is that there's a number of new funds that are setting up directly in this area, and there's a number of the existing emerging market funds which are moving capital into the region. There's relatively low inflation. A lot of them have had economic deregulation. And they're actually uncorrelated returns to what we would expect in Europe and North America. Meanwhile, actually many of them are oil and gas rich or commodity rich. And this is what really makes them very interesting.
Okay, Paul, final word, yes or no, Middle East and Africa?
Not for me personally. I'm a bit concerned about the oil price. My gut feels that the oil price will maybe head down towards $60. I think this will have a significant impact on those economies. I like the uncorrelated element of the countries, because that's what you're looking for in a foreign investment, but not with the oil price coming down.
Right, guys, thank you very much. Hopefully you'll all come back a little bit more sane next week. So there you have it. The monkeys must have finally gone mad. Invest in Africa, invest in the Middle East, invest in land. Well, maybe I'll end up with egg on my face and they'll be proven right. Remember to check out the website 4wm.co.uk for previous episodes and more banter from the monkeys. We'll see you next week.